Good morning. I'd like to open the Audit Committee meeting for the month of June. First thing on the agenda, do we have any public speakers? Seeing none?
Nope.
I need a vote to approve the minutes of the last meeting, please. Second? All in favor? Carried. Okay, Mike, what about the work plan? What are the changes?
Sure, Jim. The following changes have been made to the work plan. We will have Deloitte's reports on the pension plan are being moved from the January to the September meetings, and the presentation on ethics and compliance programs update from the April to the June meeting next year. That'll be June next year, 2016. And then we'll have a one-time presentation by Deloitte on GASB 68 changes, which will be done in the next Audit Committee meeting, which is scheduled for September 24th. So that's the change. And of course, we have diversity. We'll be coming back in September to talk about the closeout process. We've been monitoring them. I'm going to talk a little bit about that in my presentation. So on that, and they will be coming 3 times a year to the Audit Committee to talk about where they're at.
Okay, any questions? Okay, independent accounting review, first quarter 2015. Mike.
Good morning.
Good morning.
I have one additional person with me today. Leah McGuire is right next to Glenn Friedrich. She is my information services technology partner. So as we go through the process of the management letter, if there happen to be any comments relating to specifically to the work that we did in the information technology area, she'll be able to add some input for us from that perspective. The rest of my team is the same as you've seen here previously. I have a number of reports to go over with you today. As Chairman Sador mentioned, the first item we're going to cover is our independent accountant's review report on the first quarter financial statements. We have completed our work on that review of the financial statements. As a result of our review, there were no adjustments posted by the MTA. There are no past adjustments in our work papers. We found the financial statement presentation to be consistent with what we have seen in the audited financial statements, in that there were no changes in accounting principles, policies, or practices. Management estimates were calculated in accordance with what we would typically see as well. So there's nothing that we have to report to you specifically on that first quarter financial statement.
Okay, the only thing I always look at is a comparison to our financial plan, and that looks very, I'd like to see them so that the actual is a lot closer to the financial plan. So that's fine. Does anybody else have any questions regarding accept? Second? All in favor? Any opposed? Carried. Much will stay right there. They're single audit reports.
The single audit report is the next item to bring to your attention. This is a report that we are annually required to do. It relates to our audit of the federal and state monies that you receive in the grant programs. This report contains several things in addition to the financial statements. It includes a report by us on the internal controls as it relates to the basic audit of the financial statements. It also includes an internal control report and compliance report as it relates to compliance with specific major program requirements. As a result of that audit, we list all the federal expenditures. We list whether or not there are any significant deficiencies or material weaknesses. There were none. We are required to report any findings that come to our attention in excess of $10,000. At the federal level, there was one finding as it related to procurement on one specific contract where there were certain contract provisions regarding debarment procedures where you're looking to see if the contractor has in fact been debarred by the federal government and things of that nature, and document in your files whether or not you've done that review. That was not evidenced by what we saw for the one contract. There was also one state contract that we had some concerns over, and that is in regards to a quarterly reporting requirement. You're required to report to the state some of the progress as it relates to drawdown on those expenditure programs. And again, there was no evidence that those reports have been timely filed. Those are minor deficiencies, but they are something that we do have to report to those agencies.
Okay. Any questions regarding the single audits? Can I get a motion to accept, please? Second? All in favor? Any opposed? Carried. Investment compliance.
Actually, if you want, you're going to cover the next one being management letter comment
Okay.
or report first,
Okay.
since that's in the way it was in your materials. As a part of our audit, we do provide you a management letter on internal controls. That is something that we do under generally accepted auditing standards. There are certain levels of findings. There's a material weakness, which would be a weakness that we would identify that would be so significant that if it wasn't resolved, could result in a material impact on your financial statements. We found none of those. Secondly, there's what's labeled to be a significant deficiency. A significant deficiency is something that we're required to provide in writing. It could rise to the level of material weakness, but in this case, again, we found no significant deficiencies. We do, in that body of that report, though, provide you several things. We provide you new comments as it relates to what we found in the current year as a result of our procedures compared to the prior year. But also, if we have provided to you in writing in the past comments, we do follow up on ones that were not resolved as of the previous year. So you will see different dates relating to those by agency. You'll see some that are 2012, 2011 type of comments that are still carrying forward as those are being adopted. But we did have several items in 2014 that we found that I will just briefly highlight for you by agency. At the headquarters level, we had two information technology related comments, one relating to backup of files and documentation that files are being timely backed up and accurately backed up. And we also had some control comments relating to user access to the data center. Those are deficiencies that were identified at the headquarters level. Pardon?
What do you mean by user access?
Typically, you have controls in an IT environment that would say only certain individuals are authorized to go into that department or have access to make program changes. We found several situations where there were individuals that we believed had access to the system that didn't need to have it based upon their job responsibilities.
Does that rise to a level commonly termed hacking?
No.
So are you telling us that you have found instances where people who did not have authorization, did have access, right?
Yes, correct.
I think these are terminated people, among others, right? And they continue to have access, and they shouldn't, probably.
Correct.
Okay.
These would be individuals that had some previous working
Oh,
relationship with the MTA. They're not outsiders.
Okay.
To deal with the hacking situation. At the BSC level, we had a comment regarding vendor master file maintenance and also, again, backup of those files. At FEMTAC, there were no new comments. Long Island Railroad, we had I'm sorry.
Can you just direct us to where you're going? I mean, you're clearly in Appendix A. You just want to guide us a little bit so we can follow along, if you don't mind.
Page 146 is where the management letter starts.
Yeah, thank you.
Unfortunately, I don't have the same PDF version that you do, but I can then point you within the management letter itself, the numbered pages that we have. Yeah. What page is it?
So currently, we're on page 174 of 233 in the booklet on the bottom, which is the First Mutual Transportation Assurance Company, FIMTEC.
So, Mr. Zuckerman, have you follow now where we're at? Okay. Okay.
Right here.
For Long Island Railroad, we did have one accounting-related comment, and that relates to assets that have been previously recorded as construction in progress. As those items were completed and, in essence, put into use, they were not transferred from construction in progress into operating assets on a timely basis. Therefore, there would be depreciation of those assets that wasn't being recorded timely in the financial statements. Mr. Mortler?
On page 154, you indicate a recommendation concerning access that was iterated by you in 2012, reiterated in 2013, and reiterated for 2014. I have two questions. One, do you do any follow-up from year to year, or do you do it periodically within the year? In other words, do you just wait till the next year comes around, or do you check in the intervening period? And number two, do you do anything in terms of communicating directly with management when you have a concern that goes back at least 3 years unresolved?
As we are doing the planning of our audit, we do in fact look at what the prior year comments are. We look at the remediation steps that have been put in place by management. We recognize that some of these, it does take a period of time to resolve. And that's not, I will say that's not unusual for any governmental entity or even any corporate entity. I have corporate clients that file with the Securities and Exchange Commission where we will have comments that will recur from year to year. We are looking for progress in those areas. We do, in fact, look as we're going through the audit to make sure that there is some interaction, but I'll let Leah maybe add some thoughts in terms of what they look for on specifically this area.
Yes, we typically review each of the issues, and it's a standard control that we look at each year. And as we go through the process, we test new samples and meet with management to confirm that if we do have a deviation in our process, that our facts are correct.
I know that the issue of access is something that is on the public mind increasingly these days. So my question to you is, do you get any response from management on this?
Yes, we do.
And it is?
And they provided their responses that they agree with our finding and that they are in the process of enhancing the process and working through at the beginning of the third quarter of 2015, that they are going to implement a new process and enhance the current process, reevaluate users with access.
And Mr. Mortler, the other thing is this specific comment on user access as it relates to this entity on page 154, this is the first year that we found that comment. It didn't exist in prior years. Now on page one,
This one did.
or one,
This one
well, that's impact application, change management for impact application. It's user access is on the previous page. So you will see, for instance, change management, which is item 3 on at least my page 154. There are comments that relate to 2012, 13, 14. So we are, in fact, following up on those every year.
We are doing those things, we as an agency are notified by you, and that we are doing those things that can be done with the optimum expedition to correct things like this. That's all I want to be sure.
Okay. I believe we were talking about Metro North Commuter Railroad as it related to their fixed asset amortization. And we did, in fact, see that. We believe that's being adequately covered on a future basis. You will also see user access and privilege level access as comments in the current year that did not exist in the previous year. At Transit, there was a item that we found in our audit that related to how you calculate deferred revenue. You are basically selling to your users cards that in some cases could be 30-day access cards. and there's a management estimate that's used to determine how much revenue you recognize at any point in time. So if somebody's bought a card in the middle of the month, at the end of the month, you recognize a certain amount of income if you're doing the 12/31 financial statement. So there's a calculation they go through. We suggested some refinement to that calculation. Mr. Zuckerman?
I think actually you were on Long Island Railroad before Chuck's question, and we then jumped to Metro North. The reason why you did that, I believe, is that the same finding on page 180
Yes,
is the same finding for Metro North as it is the same finding for Long Island Railroad on 177.
yes.
And so my question is, since you jumped over because it's the same finding, you've got two divisions that have been working together more and more collaboratively over the years, but it's the same finding in two different places. Why are we having two agencies who have the same finding, and what can they do together to learn how to work through this issue? First of all, am I correct that it's the same finding?
It would be the same type of finding.
Okay, so then that leaves the question, if two major divisions of this organization are doing the same thing, I hate to use the word wrong, but not to the standard that you expect, what can we do to help them? Because it's not as if there's an omission of behavior in one and it's an aberration. It's actually happening in two of the divisions and therefore making up a large portion of the activity. So that becomes almost systemic then, in my view. So how would you think about helping both entities work on this issue? Because clearly, if it's just one random person in one random organization, that's a control problem. When it's two happening simultaneously, that feels more systemic.
What we do is, as we're drafting this letter, in addition to dealing with the finance people at the various agencies, we also do talk to Mike and his team, and I know Mike is looking at some of these comments to try to bring in some of the common controls. I will say from I guess, defense of the accounting departments there, this does require information being reported from the actual people in the field that are putting these things in service. So if that communication doesn't occur timely, accounting can't do anything with it.
My point was not the damn accounting. My point was only to say that if it's happening, like, so to your point, if it's happening in the field, and if the field in Westchester and Putnam, et cetera, and the field in Suffolk and Nassau are having the same problem, then we get a lot of the field having the same issue. And so it feels like that's a training issue more than it is a accounting issue. And so if it's a systemic problem, maybe there's a MTA-wide solution as opposed to a Metro North solution and a Long Island Railroad solution, which if you read your letters individually, you wouldn't realize that's the same thing happening in multiple places.
Your earlier comment about how much revenue transit assigns to the 30-day Metro cards because some are purchased mid-month or the third week in a month, was the issue just how much they show for that month's revenue? Because obviously, once somebody makes their first swipe, the card is active.
Yes, the card is active at that point in time, but to say that the individual won't have continued use, the accounting rules would say if somebody still has the right to use through that entire period, you may not be able to say it's specifically, you shouldn't be recognizing revenue when it's first swiped, which they don't do. There is a calculation to determine, sort of where they're at in that process. But some accounting theory would say if the individual has the right to use it all up until the end, you might defer all of the revenue till the end. And in fact, there's a new accounting pronouncement on revenue that may require you to do that in the future. But we're just asking that there be further refinement of how they go through that process. And also, if you think about it from a year-to-year basis, assuming the amount of prepaid cards are very similar, the income statement impact is likely not material. It's just what is the balance sheet impact as far as what's been deferred at a specific point in time.
To your earlier point, once, if a customer buys a 30-day Metro card at an MVM, at a vending machine, the MTA has the money right then. It doesn't really matter when they use the card, does it? It's not earned, but you have the revenue.
So that's why they've recorded the cash and they recorded the deferred revenue. Then it's when have you, quote, earned the revenue.
I see. Just out of curiosity then, how do you show the revenue for somebody that buys a 30-day card and unexpectedly has to go away and doesn't use it? You have the revenue, but they haven't taken a ride.
At the end, they do have reports that would say at the end of that 30-day period, in essence, you then have earned it all. It's like breakage of a gift card you might buy at a retailer. If at a certain time it expires, that's yours. But up until that point
But
in
you
time,
don't actually know when, if they
Right.
haven't had a chance to use it, when
right.
it expires.
You're getting into exactly how that works. Transit. On transit, in addition to this time-based card situation, there was also, again, data center access as it related to that group. At Certoa, there was a comment we had on how they calculated their reserve for inventory that they have on hand. And that's just to identify some items that might become obsolete or things of that nature. And lastly, at TBTA, there was a classification item that we were dealing with in terms of how much of the pension liability should be long-term or short-term calculated. And that will actually self-correct itself as GASB 68 comes into play, which we'll talk to you about at the next meeting. And then we did have data center and administrative access again at TBTA.
Succession planning. And I've been here a long time, and that's always been on the minds of all of us, because we have a tendency to lose people, and it takes us a long time because we lose a lot of knowledge when people retire. I guess my question is, has there been, what is management's response? Because this has been on books forever. So the question is, what is management's response?
Yeah, I mean, it is in fact on everyone's mind, and I know that we have had conversations with HR about putting processes in place to ensure that we are identifying those employees with knowledge that would be potentially walking out the door sooner rather than later. The other thing that my office has been talking about doing is ensuring that the documentation on processes is adequate, so that when the day comes when we walk out the door, that there is sufficient information for those individuals who come behind us to be able to take over that position with sufficient clarity to know what needs to be done. But those are the kind of things that we've been looking at and talking to. Yes?
Lamont, let me
It's
ask
okay.
you a question. In the preparation of succession plans or in their enforcement, is there anything at all that is being done that could be viewed as an attempt to hasten the person out of the door inappropriately?
We are definitely not rushing people out of the door.
I just want to be sure.
We're hanging on to people as much as we possibly
As
can.
one ages, one hears footsteps.
The data centers were consolidated 2 years ago. The comment under B and T refers to the consolidated data center. Okay, or do they have another data center, and who is responsible for that?
No, it is a consolidated data center. The reason we kept the presentation the same was because in the prior years, there were some responses, and there were some lingering responses regarding the data center. Going forward, as you mentioned, Mr. Chairman, the data centers will be consolidated, and they will all fall under the MTA HQ, where they reside currently.
Okay. On page 47, it appears that a debit was made incorrectly to an account receivable other instead of a credit to unapplied cash. And this area seems to have existed in 2011. And my question is, since 2011 through 2014, somehow this should have been corrected. I mean, this is really a mechanical debit credit. So my question is, what is management's reply to that? The fact that it's just a mechanical mistake, debit for credit.
I'll have to look into that one. I don't actually know the response to that. Do you? Yeah, we'll take a look at that and get back to you.
We have a response.
Yeah. Yeah. Bill is here to answer that, yeah.
Well, it's an MTA, it's both MTA and, so we have. That's Bill Vazoulis, the controller of MTA.
Yes, I'm Bill Vazoulis, the controller of transit. We're looking into this right now. This debit balance that exists in this account, we are going through and looking why it wasn't applied against the cash properly so that it didn't end up a debit balance. And what we've found so far is that we think that this relates to a project where there was a prepayment and then there were charges that came in that were matching against the prepayment. It's a little unusual because some of our projects, we get funding from, say, the city of New York up front. And at that time you get the money, you don't actually have a billing that's done, so it doesn't match until you get the bill, the actual work starts. Gets a little confusing, and then you have to match up the debits and the credits so that they apply the cash against the charges. So we're doing that analysis right now. We're getting very close to the answer, and it's basically a bookkeeping adjustment that's going to be made. There's not going to be any change in cash and no change in revenue. We don't think it's just going to be sort of a matching of the things within accounts receivable.
Okay. I have one more question. Accruals for bridges and tunnels. By looking at the comments and the operating accruals, it appears there are 3 consecutive years there have been issues relating to the recording of accruals, and the recommendation to date have not been effective. What can be done to prevent this from recurring? Is there any additional actions required? Some page number 63 of your report, not 63 of our report. Page 63, top of the page is operating and capital improvements.
Mr. Chairman, this comment is a recurring comment, and albeit the management of the TBTA does take the comment seriously, and they work with their engineers to make certain that at year-end, the accruals that are booked are appropriate. What's happening is the accruals are being recorded as they should be. And then subsequent to year-end, they're getting actual invoices in whereby they should be doing, management and the engineers should be kind of going back and doing a retrospective review on what was accrued, because now you actually have an invoice in hand. So there were certain instances whereby, and rightfully so, accruals were made to the financial statements, but subsequent to the fact, invoices that came in, they could be either more or less, whereby the accrual should be adjusted because you now actually have the invoice. That's what's reoccurring, and unfortunately it's one of those situations where it's truly a timing issue, and there's a lot of things going on at year end. So while the accruals are being made at the time with the best information available, there are some instances whereby invoices do come in subsequent, which would then change the accrual that was reflected because your books are still open. So that's what we're suggesting to management as well as the engineers. Management works diligently with the engineering department and has had meetings with them subsequent to our comment to make certain that this is alleviated going forward.
Okay, thank you.
You're welcome.
Any other questions regarding the management letter? If not, I need a motion. I need a motion to accept. Second? All in favor? Any against? Carried. All right, now we can get back to the investment.
Right, I have one last report, which is very small. It's the investment report, and this is where we're doing an audit to make sure that you are complying with the New York State Comptroller's investment guidelines. We did that, and we found no exceptions to the policy.
Any questions? Okay, I need a motion to accept, please. Any against? All in favor? Carried. Okay, thank you very much. Lamont, you're on.
We have a presentation this morning on our Enterprise Risk Management Committee report. This is an update from the prior report that we gave, I believe, in November. So to give you a status of where we are as of this particular period, at this point, we have reviewed with all the departments within the organization their key business processes with their associated risks and controls. We are, at this point, involved in testing those controls and documenting the results of that testing. The information and the results of that testing will be provided at the November meeting. We are, at this point, preparing the report, which is our annual report on internal controls. It's our internal control certification and summary report. Again, that will be presented to this committee in November. We met during the quarter to discuss significant issues and any MTA organizational changes. And again, we continue to work on consolidating the internal control process into a single application, which is the GRC system. Currently, we are looking at almost 2,000 total business processes across the organization that are part of the program, with 671 being identified as significant business processes. 431 of those were reviewed during the period. There are approximately 3,919 total risks as part of the process, with 6,402 controls. Strategic and internal-driven risk change, again, the procure-to-pay process review continues to be something that we are looking at very closely. The IT transformation, we are meeting now on a weekly basis with Sid's team to go over the vulnerability assessments for the MTA and each of its agencies, to look to consolidate that process, to look for any possible redundancy, to streamline the process, and to make it more effective. We are going to be working with Treasury on the Treasury transformation, and again, the GRC migration and the ERM guidelines are still things that are being looked at in terms of changes that are driving the program. There are some external driving forces that we're dealing with as well, that we are still waiting for the state to provide us with their new guidelines. That has been on our radar for several months now. We're still waiting for those to be released. We continue to work on COSO 2013, and we are actively training staff across the entire organization on internal controls pursuant to the new state mandate.
Can I ask a question? What is COSO, C-O-S-O?
Committee on Sponsoring Organization is the standard for internal control that we utilize. It provides a framework that we use to identify the elements of our internal control program that we need to meet. This board issued guidelines, I believe, in 2011 on internal controls, and one of the standards that we utilize is COSO. I can provide you with an executive
Who's on the
summary.
committee, for instance? Who is doing this? Who's the committee?
The COSO is actually comprised of several organizations, accounting organizations, as well as corporate organizations.
Oh, okay. It's not external. It's not.
COSO is external. I'm sorry. That is correct.
It actually goes back to the Treadway Commission back in 1992. It was put together in order to look at best practices over internal controls, which the MTA has adapted, as well as private and public organizations.
But this committee, ERN, is internal.
It is internal. The Enterprise Risk Management
And who
Committee,
is on that?
it is composed of representatives from each of the MTA agencies, as well as IT and risk management. It has representatives from Long Island Railroad, Metro North. They're they're all senior management employees from the organization.
And you meet once a week?
Oh, no. What I
heard.
said was we're meeting with the IT team once a week to go over the IT transformation and the controls that are related to that.
And who is identifying these material weaknesses and significant deficiencies? Is that what the auditing firm identifies, or do we identify them ourselves?
This is internal. This is what being identified.
Internal.
This is, yeah.
Presumably
self-assessment.
includes the ones that.
Right. If you remember from my presentation in November, we kind of gave you an overview of how we structure it. I mean, the ERM committee kind of sits at the top of the food chain, for lack of a better word. But the program itself is coming from the bottom up. Every agency has an internal control coordinators or managers of control activities, I think is another term that we use. In every single department within the organization that has responsibility for identifying the key business processes, the objectives of those processes, the risks to achieving those objectives, the controls that we have put in place, and the testing to ensure those controls work. So this information is bubbling up from the very operational levels of the organization up through the agency's internal control officers, up through the ERM committee. Sorry.
So we have 4 open issues in Long Island Railroad and 10 in Metro North. Is there any further breakdown or explanation as to what those open issues are and timeline on when they will be closed?
We have representatives from each of the agencies here, if you would like for them to come up and explain what those open items are.
Having been reported, why not?
Okay. I just want to make one point clear. Again, this is a cyclical process. So as testing is being conducted right now, I think when we get to November, you'll see that these numbers go back up again, and then we kind of work through it. So I just want to make sure that's clear. Yeah, it's an ongoing process.
Good morning, Nate Gilbertson with Metro North. We started out with 27 open items, and again, this was coming primarily from 2013, which was a rough year for Metro North. A number of them were reviews by outside entities like the FRA and NTSB. And again, a number of these were what I would say long-term issues in terms of getting them resolved. I'm happy to just run through the list if you'd like.
Could you limit it to the 10?
Sure. The first one is on military leave management. And one of the issues there is just needing a policy change, which has not happened yet. Grade crossing inspection and maintenance, and signal maintenance. Again, one of the issues here was in terms of identifying electronic ways of capturing some of this information. So it's an IT function that is taking longer than, and it probably will not be done until the end of this year. GCT inventory. This has been a topic at Metro North for some time. And again, it's a system change that is going to take more time to do. It's not an easy fix. Management and monitoring of diesel fuel and heating fuel were 2 additional ones. The board approved an advanced metering initiative some months ago, and this will address the topics around those issues around ensuring controls around the delivery and monitoring of both heating fuel and diesel fuel. But again, in terms of its implementation, it may not be until 2016 or early 17 before it's completed.
Can I ask you a question?
Sure.
You've now gone through, I think, either 3 or 4 items ranging from military leave to heating fuel to grade crossings. And you say they are not easy items to fix, and they'll take a year, 2 years, or maybe in the Never Never Land. And my question is why? Why does it take so long?
Why does it take so long? I think the process for developing new systems on some of these is a challenging one with the current IT environment.
I don't understand the response. I hear what the words, the lips are moving, but I don't hear the words saying anything to me. It's challenging. I understand it's challenging. So don't you have challenges every day and meet them?
Yeah, it's not as if there's been no work done on these. So take, for example, some of the work on another one of these, which is track maintenance. Development of an IT solution for this has been ongoing, and they're testing it right now, but it's not done. So it's not as if work has not been done on these and that they've just been sitting for the last year.
I give up.
Could I hear the remainder of the list, please?
Sure. Facility maintenance and repair. Again, this is an issue in terms of documentation of the work being done on our facilities and whether we're closing the loop on that work. Again, it goes back to an IT solution as part of it. which has not been implemented. Track maintenance and repair, which I mentioned, visual track inspection. Again, the answers on these are development of IT systems. Capital support is an additional one. This is looking at how we monitor the conductor flagging operations for capital projects and being able to capture where they are and document that in an electronic system as well. And finally, job training out of the Operations Control Center is the 10th one. And there it's an issue of just developing some additional curriculum and making some hires in the training department. How long has that one been on? I guess it's about 1 year at this point.
Takes a year to develop a curriculum and to hire some people. Is that what you're telling me?
Pretty much, yes.
Hell of a way to run a railroad. At some point, can IT explain to us its response to that? Do you think that would be appropriate?
Mr. Chairman, I was going to make a broader suggestion. I'd like to hear the open items on Long Island Railroad as well, but it seems to me that on the open items, as they remain open, we should have a report on each one of them as to how it's progressing and what the timeline is at every meeting, so that we can keep track of these items.
Okay. Well, let me for a minute just kind of address the IT issues for a second, because I think that's important to understand what we're doing at this point. I mean, right now we have taken hundreds and hundreds of these IT business processes, and we are in the process of trying to bring all of those processes which existed prior to the IT transformation in Long Island Railroad and Metro North and Transit, and to bringing them together in a way that makes sense, that's efficient, that gets rid of redundancies. So to a certain extent, what you don't want to do in this situation is to go through a process at Metro North to put something into place that, frankly, as we go through the process, will Sid and his team decide that perhaps the process at Long Island Railroad is a better process and we should be utilizing that process versus what they're currently doing. So there is an active engagement right now between my office and Sid's group to look at all of these things so that the controls that we put in place and the processes that are being identified are the proper ones in this new environment that exists. So it's a very dynamic point that we're in right now, and I just want to make that point very clear. Because you're talking about hundreds of processes and thousands of controls that are all being reviewed at this point. Sorry.
Got it.
Okay.
What is a control? You've got 1,324 controls at LIRR and at MTA, at MNR, only 496. So what is a control?
When you logged into Director's Desk and put in a password is a control to prevent unauthorized access. A control is anything that is a process, it is a procedure that is designed to mitigate, and again, the key word is to mitigate a risk, not necessarily prevent it. I mean, we can only mitigate risk. We can't guarantee it, a prevention. So in your daily life, there are probably, thousands of control points that you hit, from a traffic light on the street to prevent you from that wonderful red light camera that we all love so well. So that's what a control is. I mean, we can, kind of go into details, but it's quite extensive. It's authorizations for, things like travel. It's the policies that this board issues in terms of, investment guidelines. It's all those things.
And these findings are results of internal audits?
No, these are results of management self-assessment. Management tests its controls. We put controls in place.
Arose by any other name. I got it. But what I'm simply suggesting is that what would save an awful lot of conversation is a running list of what they are, their nature, when we expect them to be closed, and what the reason is for the delay, which is pretty much what every other enterprise does.
Yes, in November, we provide you extremely detailed, the summary report lists the control deficiencies, what we're doing to correct them. So in November, I think you'll be, maybe that we can take a look at that point, because I think that's the kind of information you might be looking for in that report.
Mr. Chairman, all I suggest is that some of these open issues are serious in nature.
Yes.
Some of them are not. You know, they don't adversely affect passenger or employee safety, but some of them, some of them are very serious. I would think it would merit more than if there were open items over the course of time, it merits more than an annual exposition and explication of them.
Okay.
So do you think
Sure.
we can take those 14 items and maybe come back to this committee and our meetings and just give us an update on
Oh,
where we stand
absolutely.
with each one?
Without a doubt.
Okay. John?
Thank you, Mr. Chairman. I'm not on this committee, but I did have a couple of things I wanted to ask, so I figured I'd show up and ask them. To follow up on what Freddie said, one of my questions was, is there a way the organization, or is it appropriate for these reports to put some type of order of magnitude or seriousness or something to help the reader or board members maybe to determine the seriousness or the magnitude of the problem? When you're presented with page after page after page after page and list after list, depending on which report you're talking about, of problems, it becomes more difficult to assess the seriousness of it. So I don't know, are there other ways to do it? For an organization this big, you get 50 pages of deficiencies, for example, and it's hard to assess what that means when you're flooded with data.
Okay, I mean, I think what we might be able to do for the November report, we could possibly include the risk ranking for the deficiencies that we're finding. What we do is that as part of the internal control program, the risks are ranked. There's an overall risk ranking based upon the significance of the impact if the risk should occur and the likelihood of it actually occurring, giving an overall risk ranking. So that might provide the information we're looking for in terms of a level of severity.
That would help me. I don't know if that goes along with what Freddie was thinking, but no.
All right,
All
so
right.
we'll
Well, and then thank you. And then the other thing, of course. And then the other question I had, just a generic question, with respect to the letters, don't you miss me not being here? With respect to the management letters, it's difficult for me. I'm somewhat familiar with a couple of them just from my practice, but it's tough to determine what's boilerplate from what's not boilerplate. Is there any way other than, excuse me, asking questions, what is the boilerplate and what we should particularly be concerned about with some of these letters? And specifically, is there anything in the management letter report that is not boilerplate that we should be particularly concerned about? It's just words on a page, kind of the same thing Chuck just said, have a meaning or a lack of meaning, depending on your knowledge base.
Mike?
We do rank those deficiencies in our reports in terms of, I'm not sure if you were here at the beginning when I was going through it or not, but I did describe what a material weakness was or significant deficiency, and you had none of those. Those would be the ones you really need to pay attention to. But to answer your specific question, there's nothing in here that is a modification of any of the standard reports. So I guess to say it is, in fact, a accountant's boilerplate from that standpoint. But there is nothing that should be highlighted to you over and above that. But we would do that if there was something that we believe needed to come to your attention.
Thank you.
Get the Long Island's for items, please.
Hi, my name is Joanna Rosado, and I'm with the Long Island Railroad, and we had four recommendations that are still outstanding. The first one had to do in the administrative area of transportation services, and the weakness that we found was that yard master time slips were approved without the printed and signed name of the authorizing manager as required. Instead, the time slip stated as per agreement. In these cases, management was immediately instructed that they have to print and sign approval on the forms. In addition, new protocols are in the process of being rolled out in the crew management office, and once they are implemented, transportation services will have the ability to make assessments and perform additional random audits, and that's expected to be completed in the third quarter of 2015. Okay, the second one that we had came from safety and training and their safety operations, and their weakness was safety's review to ensure that all personal protective equipment on the approved product list was reviewed and approved, meets current standards, and is included in the personal protective equipment catalog was not documented. The estimated implementation date for this recommendation is the fourth quarter of 2015, and safety will revise its process to ensure review and approval of the PPE on the approved product list is documented. The next one that we have, again, is from safety and training. This one is from the fire marshal's office, and the weakness that was identified here was that mailings from safety invitation outside agencies to Long Island Railroad training sessions was not documented, and records on fire drills held in 2013 were also not documented. This one is scheduled to be implemented in the third quarter of 2015, and currently safety is updating its distribution list and conducting a gap analysis for priority outreach mailings. In addition, an Excel matrix was developed in 2014 to be used to track all outside agency training invitations and attendance. And the last one that we have outstanding is also from the Safety and Training Department, and this one is from the Safety Performance and Hazardous Assessment area. And basically, the weakness here was that the annual audit of the System Safety Program Plan to ensure conformance with and provide required updates as per APTER standards and anticipated FRA regulations was not being performed. This is scheduled to be implemented in the second quarter of 2015, and safety is developing a strategy to implement the annual audit of the safety program plan.
Okay. Okay. Thank you. Okay. Thank you. Next on our list is the audit plan status.
Thank you, Jim. I'd like to update the committee on the status of the audit services plan that was approved by you in January of this year. I'll just put it up 1 second. Good. This is an overview of the audit areas that were included in the plan that we're working against. It was approved by the committee, as I said, in January of 2015. In our audits, we're continuing to cover a vast array of MTA activities that include administrative areas such as payroll to pensions, and operational areas as far as track maintenance, signal maintenance, bus depots, maintenance shops, and various activities at bridges and tunnels. Our 2015 strategy continues to focus the audit work on risk, internal controls, as we discussed, and the cost of operations, certainly. We support agencies' goals and initiatives. We participate on task forces. We participate on technology projects as well. We promote effective corporate governance, which is one thing that the Audit Committee wants to stress. And we also validate the implementation of our audit recommendations. Although I'm thinking about after this meeting that we should continue, we should also add to our list the external audit recommendations so we can follow up on those continually as well and report to them through Lamont and the committee. So we'll make that correction. Yes.
Under capital program, I imagine the rebuilding of South Ferry is under Superstorm Sandy.
Yes,
But
absolutely.
what about the rebuilding of Cortlandt Street? Where would that appear on here?
Let me just ask, Michelle, do you know the Cortlandt Street? Come up.
The ones that you see on the slide are just a highlight of what we're doing in that area. So we do you know, all the closeout, the interim audits. None of those are listed in that bullet. And we also look at project management and various other capital operational issues in all of the capital projects that go on across the agencies. And that's just not in that roll up you see.
So the answer to Cortlandt Street, yes, it is
Yes.
included in our
Right.
Sandy work.
I mean, that's something we have to watch because it
Yes.
involves the Port Authority as well.
All major costs. I'm going to show a little bit about our work in the Sandy area in a minute. Thank you, Michelle. Just to give a highlight of our first half activities, this information was reviewed with the chairman and each of the agency presidents this past month. In summary, we had a productive first half of the year. We completed 76 projects and 64 audits, contract audits, with 260 recommendations. At this point, we are on target to complete our 2015 audit plan, and we'll keep the committee apprised of any changes. One of the things that we evaluate when we review internal controls is certainly not just compliance, but how effective and how efficient are they to the agency. Almost 20% of our audits result in identifying cost savings opportunities that we bring up to the agency where they could perhaps save some money in the implementation of their internal controls or some of the procedures that they follow, and those things are followed up as well. On the contract audit side, we also review major contracts for cost, labor, and overhead rates that are presented to the full board to ensure that those contractors that are doing business with us in good faith have allocated the proper cost to the contracts, and so we're not being overcharged from that perspective. Just to give you some areas, as we talked about Superstorm Sandy and some other areas that we are conducting and will continue to conduct in 2015, certainly our Superstorm Sandy costs. We meet regularly with the FTA. We are one of the agencies that were approved to self-audit, to perform internal audits of these costs, so we can limit the monitoring aspect. We do have an external monitor to our use, should we need it, and we coordinate that activity with the Inspector General's office. To date, we've audited $203 million of Superstorm Sandy costs, and we've made recommendations where adjustments about $41 million on both sides. Some costs that we could perhaps charge more to the grant, and other costs that would not be applicable to the grant as well. So, and we'll continue to focus on that. We have a team of 6 auditors that do nothing but audit Superstorm Sandy costs, which is a good thing. On the MWBE and DDCR, as we talked about before, we continue to work with them. We have 3 auditors assigned with them to help in the closeout process, really to help them put in a whole back office process in place to ensure that the goals and all the other activities of offices are being achieved, monitored, and properly reported to the following, to our sponsoring agencies. We're also doing work at the, I'm sorry.
Mike, you may not be ready to give an interim viewpoint, but I would very much appreciate some thoughts that you may have about what you've seen so far in the 2 months since that last presentation.
Absolutely.
Given, to be frank, the severity of what I heard at least that day gave me pause. I'd love to hear your, if you're prepared to give any interim comments, I'd appreciate that.
Well, one of the things, the DDCR is coming back in September to give an update on that, but I do see a dedicated emphasis on that. You know, when we started this activity, they had closed out only 12 contracts. They're over 500 now, which just shows you the level of emphasis they have. They committed to the authority that...
Out of how many were still
about
open?
1,000. So they went from 12 to 500, and with my office adding resources and a dedicated effort of Michael Gardner, who's really, I've shown a dedicated and renewed interest in this area, and we meet regularly. I could say to you by the end of the year, he'll probably have that all completed, and we'll let him do it. But I've seen a great, and one of the things they needed was resources as well. He hired 3 of my former auditors there that'll give him that financial analytical capability that's needed in such an area, you know. And to say, we have a lot of contracts, we have a lot of subcontractors doing business with the MTA, and it just, you know, it's not a small job at all. It's one of the largest agencies in this area, and we're making sure personally we're keeping on top of that department so they will have the proper controls and results in place. And I think September will be a good news story, I mean to say. Transit Adjudication Bureau, they are putting in a system. It's important to New York City Transit. It's the tickets that they write in the subway, and how do we collect on those tickets. We're being involved in making sure that system is implemented and it's working correctly. Prescription drug plans, we continue, the MTA is a self-insured company as far as medical costs. Medical costs is a large expense item to the MTA. It's over $1.5 billion. We continually do audits in those areas because it's real money. I mean, all the areas you talk about medical costs and the associated internal controls issues. We do have a dedicated team of auditors that continually look at prescription drugs, employee eligibility, medical claims, third-party providers, all the related activities, health, prescription eyeglasses, as well as dental costs. So it's a huge area from a cost perspective that we continually stay on, and we continue to reap good benefits from that. And then, of course, we look at other ways that we get money. Capital Revolving Fund was one where New York City Transit, New York City was responsible to give us a certain amount of money every year. We were a little bit behind on the billing the city for those costs. We identified those costs. We worked with New York City Transit, and I'm happy to say we got back about $17 million of costs back to the MTA that we had expended funds for that should have been funded by the city, and the proper controls were in place to ensure that every year we will be billing those costs as they come up. And then looking ahead, finally, of course, we're going to try to complete the 2015 audit plan, and we'll continue to work with MWBE for the remainder of the year and certainly into next year, I would imagine, and they'll continue to come to the audit committee. The chairman asked us, our office, and me personally, to be involved with the enterprise asset management system that's being implemented at the MTA. It's a very large enterprise technology system that's going to be very costly, and we're going to get involved at the feasibility stage now through selection of the software, through implementation. So we are involved, and hopefully we're making good progress there. And, of course, working with YL and the BSC on the PeopleSoft 9.2 upgrade, as well as procurement and procure-to-pay in those areas. We're continually involved with the pension area, another high-cost area to the MTA that we should keep an eye on. And, as I said, Transportation Bureau and, of course, all the quality assurance functions that we have in place throughout the agency to make sure we're doing the right thing and those quality assurance functions being done. And then, of course, we'll coordinate with the City and State Control's Office, the MTAIG, as well as Aman's office to make sure those audits are being done. And my office will also perform a quality assurance review, internal one that we're required to do on our own activities, and we'll report to you back in January on that. So with that, that concludes my presentation. If you have any questions, yes, sir.
On Monday, we had a presentation on the progress being made on the M9 in terms of bringing it into play. To what extent, if any, does your office audit that process?
The M9 from what perspective, sir? As far
Where
as
they
costs,
are
as
in
well as-
terms of where they're going, what changes need to be made, but as a result of that, what costs, additional costs, will be incurred?
Wendy, are we involved with the M9, as far as you know?
Yes, sorry. Sorry. My name is Wendy Fermanez, and I work for Mike Silly.
My point is, we were told that there are a variety of changes being made to the original specifications, such as, for example, providing additional room for the transponder equipment for PTC, providing a variety of other changes, lessening the weight of the cars and the like, and that this will cost X dollars additional. And my question is, as that process is ongoing, do you audit those estimates of additional cost?
Yes, to the extent that we are requested to perform a cost-price analysis of those change orders, we do. The reason why I said to the extent, there are some historical data that's available to the agencies upon which by themselves they can determine whether the prices introduced into the change orders are fair and reasonable. To the level that they can determine on their own that the prices that's built into the change order are fair and reasonable, they would not request an audit. In other words, to the extent that there's a need for an audit, and for example, on the procurement of additional cars for Metro North, we did perform the cost price analysis of all the proposals that came from Kawasaki.
And we have a process in place with the procurement departments where most change orders in essence of $250,000, they will request us, and typically something high profile like that, I would expect that they would reach out to us, and we will look at those costs as well,
Well,
particularly
in
if they
the
don't have the
course of
data.
that presentation, there was identified several hundred thousands of dollars in terms of things that they were talking about and others that they would be talking about. And I just wanted to know whether, as this develops, you'll get into it on a current basis rather than surprise at the end.
Sure, I'll reach out to them to make sure and I'll apprise Jim of the outcome and to see if they need our assistance, and if they do, we certainly will look at it. So with that, Jim, I'll conclude.
Any other questions?
Sure.
No questions? I've been asked that Kathy Rinaldi would like to speak on behalf of Metro North and some of the issues that were brought up today.
Hi, I just wanted to speak to some of the issues that were raised in response to Ned's. Am I on? It's not on? Okay. I just wanted to speak to some of the issues that were raised during Nate's presentation. You know, as you can see from the list of items that he went through, it's a grab bag. Some of them are IT related, not all of them are IT related. Some are related to training, some of them we're tracking with the FRA. What I wanted to suggest is potentially, since this group doesn't meet every month, Metro North Committee does, we can give you a more sort of granular explanation of the various items with timelines. We'll have some of the business process owners in the room. They can answer specific questions about some of those items. That way you don't have to wait until November to get a better understanding as to what those items are and what the timeline is for addressing them.
Any comments or questions? I think it's a good idea.
Okay, so we'll add that to the agenda for the Metro North Committee meeting in July. We'll have that in the committee book. You'll be able to look at it ahead of time. We'll put together some sort of a grid showing those items with a better explanation in terms of what they are and the timeline for addressing them, and then we can have a fuller conversation about those various items in Metro North Committee. Okay?
Our next meeting is September.
No, I'm saying we'll do it at Metro North Committee in July.
Okay.
Okay.
Okay. I'd like to get a motion to go into executive session to discuss contractual matters. Thank you.